Hi, I'm Pat Keon, a research analyst with Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, August 12th. And overall, we saw aggregate net inflows of $4.9 billion on the week. This aggregated data includes both mutual funds and ETFs. Among the macro groups, taxable bond funds was the only group that experienced net outflows. They had net outflows of roughly $2 billion. Amongst the other groups, money market funds led the way for positive flows with $6 billion. Equity funds took in just short of $1 billion at about $936 million, and muni bond funds brought up the rear with approximately $11 million in net inflows for the week. In market activity last week, China's surprise devaluation of its currency on 2 consecutive days roiled the markets. These moves came on the heels of some poor economic data, which indicated that the world's second largest economy was in a slowdown phase. This was the chief driver. This news out of China was the chief driver in what was a volatile week of trading in the U.S. as both the Dow and the S&P 500 took losses on the week, as the Dow retreated 0.8% and the S&P 500 was down 0.7%. Let's turn our attention back to the fund flow activity now and take a closer look at our macro mutual fund groups. Equity funds took in $290 million in net new money last week. Taxable bond funds saw roughly $760 million leave their coffers. Muni bond funds also had net outflows, approximately $40 million, while money market funds took in $6 billion in new money last week. Let's take a closer look at our equity mutual fund group now. The $290 million in net inflows came on the heels of two consecutive weeks of net outflows, and in spite of negative performance for the group of 1.2% on the week. Once again, as usual, we see that non-domestic equity funds are responsible for the bulk, if not all, of the net inflows for the week. This week, they took in $1.3 billion in net new money, while domestic equity funds had net outflows on the week of approximately $1 billion. And taking a closer look at the data, we found that the largest net inflows for the year to date among the equity mutual funds belongs to the Vanguard Total International Stock Index Fund, which has taken in just over $39 billion in net new money this year. Let's move on to the equity ETF group now. For the week, equity ETFs had positive net inflows of over $640 million. This comes on the heels of 3 consecutive weeks of net outflows, which they saw roughly $4.7 billion leave their coffers. Those ETFs with the highest net inflows this week include the Deutsche Cross Trackers MSCI EFA Hedged Equity product, which took in over $560 million, as well as the Utilities Select Sector SPDR, which had over $380 million in net inflows. The PowerShares QQQ had the highest net outflow of roughly $720 million. Moving on, let's take a look at taxable bond funds now. We'll start with the mutual fund group. Taxable bond mutual funds saw roughly $760 million leave their coffers last week. This is the 3rd consecutive week of net outflows for the group, in which they've had approximately $5 billion leave. Investors were running away from high yield products last week, as we saw loan par funds had net outflows of roughly $570 million, and high yield funds saw $250 million leave as well. Taking a look at taxable bond ETFs now. They also experienced net outflows on the week. They had roughly $1.3 billion leave. Again, it's also their 3rd consecutive week of net outflows, which brings for a total of roughly $2.5 billion. Again, we saw high yield products incurring the highest net outflows. The iShares iBoxx High Yield Corporate product had roughly $520 million in net outflows, while the SPDR Barclays High Yield Bond ETF saw over $300 million leave their coffers. The largest net inflow belonged to the iShares 7 to 10 year Treasury Bond ETF, which took in roughly $210 million in net new money. Let's move on to our muni bond fund category now. On the week, they had slight net outflows, roughly $38 million. It did mark their 3rd consecutive week of net outflows, though. One positive point for the group was National Muni Funds, which had net inflows of $28 million. Moving on to our last group now, let's take a look at money market funds. As stated previously, they took in $6 billion in net new money last week. This is the 7th week in 9 where they've had positive net inflows, and this streak has reduced their overall year-to-date net outflows to $55 billion. The main contributor to last week's positive performance was the Institutional Money Market Fund Group, which had over $11 billion in net inflows. Well, that wraps up this week's report. If you'd like to take a closer look at the data, please go to our website at www.lipperusfundflows.com, and please join us here again next week where another analyst will be speaking to you about that week's fund flows activity.